And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa CIB, honoured by the 2025 Salter Awards. Good evening. Welcome to The Money Show. I'm Stephen Grootes. So, for much of the day, there's been the big recovery. Extraordinary events on Wall Street yesterday after the decision, the announcement, the post by the US President Donald Trump that he was pausing tariffs in all countries. There will be a minimal tariff, but except, of course, for China. But now, so even the JSE did very nicely, up 4.5%. But now, US markets nosediving again. Nasdaq is down 5%, the Dow Jones down 3.6%, and the S&P 500 down 4.3%. And I think this really shows you the story is moving to something else. The story is maybe moving, certainly moving, to the trade war between the US and China. I've made the point many times, never in human history have so many goods moved between two parts of the world as they have right now, or until a few days ago, between the US and China. So this is a global, massive shift. And you heard Professor Robert Lawrence yesterday, we will be affected, even if it's just a trade war between those two. So that's the one thing. The other, according to Reuters, is that people are not sure what to do in the United States if they've got huge amounts of money in American stocks, and maybe because it's so uncertain, they're taking some of their money out. And the gold price, very high again today, may point towards that. People are looking for something that they know, that they understand, historic safe haven, etc., 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 and that's where they're putting the money. And I think that that is particularly important tonight. So we'll be watching that very, very closely. Investment School this evening is how to invest in these very difficult times. What do you do? How much do you put in? How much do you take out? How much, do you sit on your hands the whole time? I think there will be some people doing that. We'll be looking at that, of course. And then the other thing that's really happened today is that the rand strengthened dramatically. It was at one point yesterday, 1985 to the dollar. Went down to 1920. Was it 1930 when we finished the Money Show yesterday? At 1950 now, which suggests that the rand's still very weak. In volatile times, you do not want to be in a weak position. And of course, that's primarily because of our problems with the coalition. Good to hear from you tonight. 011 883 0702 021 446 0567 and voice notes this evening on 072 702 1702.
702. Stephen is on The Money Show.
6 to 8 p.m.
I was really struck by something that Discovery said today, and they've been looking at numbers coming out of their life insurance division, and that they've seen a big jump in the percentage of people who are making claims or claims being made on their behalf because they've taken their own life, because they've committed suicide, and particularly in the segment of people of the ages of between 41 and 60. And this is probably people who are in a phase of life in which they're financially responsible for other people, children generally. And it just made me think about how difficult these times have been and how many times people can also be taken advantage, which might well be a part of this. There's stories around how people claim to be financial influencers. They've got no qualifications, by the way. Online gambling can get you into incredible amounts of trouble very, very quickly and can also be addictive. If there's one thing I think we learnt during COVID, it's that depression and those feelings, those things that stop you from falling asleep at night. When you go to the loo in the middle of the night because you're between 41 and 60, it's the thing that taps you on the shoulder at that exact moment. That thing can happen to anyone. And if we've learnt anything during COVID, it's that you really, really need to talk about it. You need to do something about it. You need to talk to someone that you can trust, and you need to be very careful who you take your advice from. I don't have any of the answers. But you must make sure that you speak to someone who you can trust. Just be aware of that. It can literally happen to anyone.
The Money Show on 702.
Monday to Friday, 6 to 8 p.m.
Well, just the most breathtaking 24 hours on world markets. As we went to air last night, markets were still heading down, primarily because the Trump tariffs had come into effect at around 7:30 our time. The US President Donald Trump tweeting that he was pausing tariffs for 90 days. That led to an incredible rally in US stock markets, the biggest in nearly 20 years. They're heading down again now. But as I speak to you now, we're in the grip of this massive trade war between the US and China. China has tariffs of 84% on the US. The US has tariffs of 125% on China. And frankly, in my view, the future for South Africa's trade relationship with the US still incredibly uncertain. Feroz Basa is the head of global emerging markets at Sanlam Investments. Feroz, good evening. Really appreciate the time. Thank you. A lot has changed in the last 24 hours, but quite a few things have stayed the same as well. One of them is the major trade war between the US and China. The other is I would expect that the Trump administration still has some very bad feelings towards us. Where do you think South Africa is at the moment in all of this?
Yes, good evening, Grootes. These things are changing dramatically on a day-by-day basis, right? So, if we just take what happened in the last 24 hours, it's just been mind-blowing. You mentioned it, the stock market rallying, South African stock market rallied as well. So one needs to just look quite carefully at what was said, right? So a 90-day pause for everybody, except China, 125% China tariff because they retaliated. But also there was a clause to say that, there'll be repercussions for, there is a pause now for South Africa as well, but there'll be repercussions for serious offenders. And when he was talking about serious offenders, they mentioned the EU, obviously, because that's their biggest trading partner, biggest trade deficit. They mentioned Vietnam, which is a loophole that China uses, and they managed to they said South Africa as well. So South Africa's thrown in that basket as well. So we haven't been spared. We've been spared for now, but that relationship with the US has seriously deteriorated. And if you look at our total exports to the US, yes, we do have a GOA preferential rate and the like, but we export $8 billion to the US. So it's a very small amount. China is like $438 billion. The European Union combined is $600 billion. So this is taking a swipe at South Africa because that number is so small.
Even if the US, say apart from China, everything goes back to how it was, right? Most of the trading relationships. Do you still think that things have been shaken so much that most countries will be looking for more trade with other markets? In other words, they'll be and this is surely rational, you would want to lessen your dependence on the US as a market right now, no matter what Trump does next.
Yes, that's a very good point, Stephen. If you look at what's happening globally now, the US has shown what it can do with its power. And they have a president that actually is utilizing that power. And trading partners around the world are saying, well, actually, you know what, we need to diversify. China was caught off guard the first time when Donald Trump became president and imposed initial tariffs on them. Remember, the world was operating as per normal. This was a China-United States trade war. And those tariffs were absorbed, and the Biden administration didn't take it off, and China didn't respond. They weren't prepared for it, right? This time they are prepared, and they're retaliating. And the rest of the world saying, well, actually, you know what, if we look at our trading partners, we need to diversify even more. You're looking at nations like, for the first time, Japan, South Korea, and China actually talking about how we're going to deal with these trade wars and tariffs. That's never happened before. So, the US pushing Japan, their closest ally, with China, which would have never happened in the past. So yes, I agree with you. People will be looking at it. Trump has said that, the BRICS country must forget that you're going to come off the dollar. If they try that, they'll be tariffed even higher. But I think slowly but surely, countries will start trying to diversify some of the exports to other countries.
Feroz Basa, so much more to ask you. Thank you very much indeed. Head of Global Emerging Markets at Sanlam Investments. Well, the events of the last few days, just a stark reminder of how interconnected the world is through money and how quickly money can move. Look at how the rand has swung up and down in the last few days. Cornelius Coetzee is the country manager for Virto South Africa. They're a currency platform. Cornelius, good evening. The rand has gone up and down so dramatically. How can companies protect themselves in this kind of environment? They need to be able to move cash quickly.
Hi, Stephen. Well, very nice to be able to be on the show, and hi to all the listeners. I think I think it's an extremely volatile 24 hours. I think, as my colleague said previously, it's been an absolute monstrosity in the markets, and I think it's a bloodbath, and it's going to remain a bloodbath after the 90 days. So I think it's more important for businesses now more than ever to actually, where they previously saw sunk costs as, or let's say additional charges as normal sunk costs for businesses, it's now time to actually look at every single cost component and really try to see where they can save money, because tariffs are here to stay. Regardless if there's a 90-day hold, it's definitely going to happen. So, I mean, from our side, and obviously in our world that we play in for B2B remittances, we want to enable businesses and we want to allow businesses to trade freely within Africa as well as rest of the world. And how that actually comes into play is where you can do two things already. The first thing is navigate currency volatility, as we saw in the last 24 hours, where you can actually trade or send money within the 24-hour time frame, mitigating those risks. But then at the same time, also trying to see where you can reduce the cost of actually sending money. So those hidden fees that are traditionally seen as sunk costs now has become more prevalent, and trying to see that as a way, or using different various platforms to enable you to transact globally is now more important than ever.
The Reserve Bank has regulations obviously around moving money, and some of those regulations around Southern Africa, they've become a little tighter. If you want to move money to Lesotho, they've become a little tighter. Is that having an impact on the way that people are moving money? Are they moving less?
I think, well, a broad term that we usually call this is exchange control. And South Africa is notorious for having strict exchange control rules in terms of moving money in and out of the country. But that said, I think where we should change our perception is that it's actually there to safeguard the country from these volatility or volatile movements in the markets. And I think the clampdown from the SARB is not necessarily something that should be looked at from a negative standpoint. I actually believe that having service providers or partners that help you navigate that more freely is actually going to help you to grow your business. But at the same time, I think, as you mentioned now, with like the common monetary area that's now being sort of, how can I say, harsher rules or regulations being imposed, it is actually there to navigate and make sure that funds are more freely movable. But having partnerships again is with let's say, for instance, Averto, for argument's sake, that allows you to navigate it more freely and safeguards you at the end of the day as a South African business or businesses investing into South Africa.
Cornelius Coetzee, thank you, Country Manager for Averto South Africa. Well, the last few days have seen such big swings in the oil price. I mean, for several months leading up to sort of this week to the US tariffs that came in, Brent crude was around $70 in the area around there. As tariffs were brought in against most countries in the world, this is US tariffs, Brent crude fell to $59. That was yesterday. In the hours after the tariffs were paused, it rose again. It's been around $62 for much of the day. Paul Gooden is the head of natural resources at 91 Asset Management. Paul, good evening to you. Thanks for the time. I mean, there are many different moving parts to this. Which factors are affecting the oil price the most at the moment?
You take a step back, the oil price was $90 a year ago, and as you said, kind of 62, 63 today. And really the decline recently driven by two things. Firstly, tariffs. So that creates concerns about a global economic downturn, which then impacts global oil demand. And then on the supply side, OPEC last week announced they're adding barrels back faster than expected. So those are the key sort of near-term drivers. But I think more broadly, you have to see geopolitics at the center of this oil debate. So, Trump is quite vocal about wanting lower oil prices because that helps cushion the inflationary impact of the tariffs on the US consumer. And there's speculation also that he lent on Saudi last week to add these barrels back a little bit faster. So, Trump can't control geology, but he does have a lot of control over geopolitics. And I think he's kind of behind a lot of this kind of downward move in oil prices.
I mean, there'll be one view that would say if demand was the key thing, if oil was just seen as if the oil price was just a sort of indicator or proxy of whether people are expecting a recession, you'd look at the oil price right now and think, well, people are still expecting a recession. But obviously, from what you say, it's nowhere near that clear.
Yeah, it's a combination of those demand concerns and also supply concerns. And so, yeah, it's not just sort of recession concerns. And I suppose, you have to bear in mind that, the cure for low prices is low prices. And what I mean by that is in a sort of cyclical commodity industry, as the price goes down, some producers will stop producing. And the key there really is US shale. So, US shale produces a lot of oil, about 13 million barrels a day. And I think that, if the oil price moves sustainably below $50 a barrel, then you're going to see lots of those US shale producers start to curtail production. So, look, we could be headed lower, but I think it's tough for us to sort of sustainably go much below 50.
Okay. It's possible, probably unlikely, but possible that the US reaches trade deals with many countries over the next few weeks. So say 90 days from now, the story only really becomes China and the US, the full-scale trade war between those two countries. Does that have a big impact on oil prices over the longer run?
It does. Historically, China has been the biggest growth driver in global oil demand. So, again, to put it in perspective, the global oil market's about 100 million barrels a day. Historically, it tends to grow at sort of 1 to 1.5 million barrels a day annually. And China has historically accounted for the largest component of that sort of annual growth cadence. And so, yes, I think that to the extent that the Chinese economy slows, it's going to impact their oil demand. China's also adopting EVs quite quickly, so that's an impact. So I think really what will happen over the next few years is you'll see other emerging economies start to pick up the growth baton in terms of oil demand. So India, for example, is probably going to be the biggest driver of oil demand growth this year. So yes, certainly, the US-China issues, I think, will weigh on demand and clearly going to weigh on prices.
Paul Gooden, thanks very much indeed. Really appreciate it. The head of natural resources at 91 Asset Management.
The Money Show.
The markets.
Viv Govendor's portfolio manager at Rand Swiss. Viv, good evening. The story, the conversation I thought we were going to talk about was the great recovery. But look at US markets right now, and they're down quite dramatically once again.
Yes, almost 6% down, and virtually, which was taking more than the 2/3, or at least close to 2/3 of yesterday's gain away. And this is basically, you're only, about halfway, if you say that, into the day for the US. At this rate, we might reverse everything by the end of the day.
What do you think's pulling? What do you think that is? Are people taking their money out of American markets because things are so uncertain? That would be a sort of simplistic way of looking at it, perhaps.
Yeah, most certainly. But also, so we are worried as well, I think, about what's been happening with regards to China. These are the two largest trading, partners in the world, the US and China. Obviously, there's places like, trade between the US and Mexico, but I'm talking about the two big blocks out there, the US and China. There doesn't seem to be any, solution to that at the moment. And that alone could be significant enough to, affect global, growth.
Quite a strong recovery on the JSE, and I presume that was really expected. That's what you thought would happen when tariffs suddenly changed.
Oh, yeah, well, certainly. I just looked at the movers for the day, and, I thought that to refresh a little bit because I was just surprised with just how few of the big companies were actually negative for the day. It was a bit of a positive day all around. But remember, this market closed, a little while ago, whereas we still see the US market continue. If you look at, for instance, how much of the, if you look at basically where the US was when we closed till now, it's significantly lower. And I suspect if we were to close, the US is closed right now, our opening tomorrow would be quite negative, and we would revert a lot of those gains that we saw this afternoon.
I suppose what people really are feeling that it was such. If we have such volatility like this, are we going to see any kind of proper pattern emerge at all? I would imagine, though, it's hard to see what Trump could do to reverse what's happening on Wall Street right now.
Oh, yes. Unless there is a deal with China, and then we would say, okay, that'll probably be reversing a lot of the stuff. I do think that, we mustn't react to everything. I just think in the fact that we basically got 3 months into the Trump administration. We've got 4 years, in total to live through. And I doubt this is going to be the most volatile 3 months of the next 4 years. Unfortunately, I think we're going to be seeing a lot of stuff out of Trump that is going to be quite market moving. And I think the markets, or investors rather, are just going to have to accept this kind of risk premium associated with his presidency going forward.
Well, does that keep gold price where it is, over $3,100, over $3,150?
Yeah, look, I mean, obviously, when you have such uncertainty, gold does, benefit from that. But I mean, gold is also, to a certain extent, it doesn't want this much uncertainty. One thing I think that Trump is doing that is boosting gold a little bit is the fact that, he's kind of devaluing the dollar in terms of its, relevance to the global economy. I mean, I don't see, Julius, after what we've had in the last, little while, including, I think, if we think about the Biden administration's, activity towards Russia as well. I would think that there was a strong incentive just accelerating right now to move your reserves away from the dollar. And one of the few things that's going to be alternative to that is gold, actually.
Viv Govender, thanks very much indeed. Really do appreciate the time. Portfolio manager at Rand Swiss. Bringing the time on The Money Show to 6:30.
The Money Show.
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
And DSTV channel 856.
It'll be good to hear from you this evening. I mean, if you've got some thoughts on how we handle Trump, all of the chaos that we've seen as US markets still in a decline tonight. 011 883 0702 and 021-446-0567. It'd be good to hear your views. I wonder if you know where you spend your money. I mean, you may have a very tight grip on it. You may be a little surprised to find how you spend quite so much on running shoes or Padel or something. But I'll tell you one group of people who do know, Visa and Discovery know where you spend your money because of the data they have about your spending habits. Well, out today, the Spend Trend 25 report looking at where you are spending money. Hilton Kellner is the CEO at Discovery Bank. I don't know, Hilton, if you ever wait in a queue at an airport anymore. Good evening. I imagine this report is really the first of these reports to include the full impact of the two-pot system. What have you learnt about the people who are taking money out of the savings pot of their pension?
Good evening, Stephen. So the two-pot system was one of the kind of the features that emerged in the Spend Trend report as a result of the kind of the high-level observation that in fact credit card spend was fairly flat year on year. And when we looked at the reasons why, we actually saw that clients had in many instances paid down debt or accessed their two-pot savings in order to do so. So kind of using long-term savings for short-term needs or expenses, often in some instances paying down expensive debt, which is probably good financial planning. In other instances, using it for things like school fees, education, and in others, some kind of day-to-day expenses or motor vehicle and home maintenance. So it is, it was one of the features that did come through, and it spoke to clients accessing alternative funds and them being under fairly high pressure over the course of last year, given the high interest rates for the majority of the year.
I mean, it tells you a story about the sort of situation that people are facing. I was really interested in a difference between spending behavior, it seems, in some of our major cities. So in Joburg, people spend a lower share of their income on groceries, but a greater share on eating out or on takeout, I suppose on entertainment generally. And that's compared to people in Durban and Cape Town. I mean, is Joburg, despite everything, still just richer than some other cities?
So I think that there's definitely a socioeconomic component to it, and we do see that I think just in general across Joburg in the composition of the client bases. However, I think it's also got to do with choice and convenience. I think the geography is important as well. There's a lot of malls, restaurants across a wide range of price points that you find in Joburg, and we also see I think there's eating out and takeout, which is facilitated by some of the home delivery services more and more, and that's linked to digital payments and e-commerce. That's definitely been a key driver, and we've seen strong growth in that area.
I suppose you can't do very much with the surfboard in Joburg, and maybe that's part of it. I mean, both Durban and Cape Town sort of have the sea.
I didn't want to say.
How are people paying for things? I mean, the long-term trend, the sort of super trend, is to use less cash, but there are lots of other trends within that. Phones, watches, virtual cards. How's that changing?
So I think as you say, the overarching trend is to move into digital payments. The payments themselves are becoming cheaper, instantaneous. So they almost kind of like behave like cash, but without the security risks, and with much more convenience. So our research showed that 2 out of 3 current card holders are almost cashless, so pretty much don't use cash at all. From month to month, and in fact, when they do, it's only on transactions at less than 100 rand. There's kind of still a perception that it's cost efficient to use cash for low value. We see the manifestation in digital wallets, virtual cards being really prevalent, but I think that the kind of the overarching shift to digital is inevitable. For 2 reasons primarily. The first being convenience. Having your card on your phone, as an example, is it's with you all the time. And the second is security. That there's a perception, and I think a reality, that having a digital or using digital payments is just, it's more secure, it's safer, and there's a lower security risk than carrying cash around. So those two are just going to continue to accelerate.
If you look at the value of the rand, I mean, it's just become very expensive to travel, and I do wonder if fewer South Africans are traveling than maybe were, say, 5-6 years ago. Are you seeing that? I mean, are people just not traveling as much? They're not going maybe to more expensive places as much?
We see a few trends in travel. The first is that travel has rebounded to the levels that we saw pre-COVID. So certainly a lot of travel that's taking place, and that is, I think that's all over the world. In Discovery's case, we've got a significant share of the travel market as a result of the rewards that we provide to our clients. So they'll typically choose to use their Discovery Bank card and account for travel, and we see that coming through that the spend on travel in Discovery Bank is about 25% higher than the rest of the banks across South Africa, and that's driven through a few things. You kind of alluded to it as we started. We've got a kind of a full service at airports, which allows you to skip the security queues. We've got lounges, but if you manage your health, you manage your driving, and manage your money, you can fly locally and internationally at up to 75% off. So it's a real saving. Our clients booked over 1 million flights on the Discovery Bank app last year, and so we actually do see a lot of travel. And one of the interesting observations in this year's report is that the semigration effect, which is kind of almost got an overlap now with travel, is strong. And the most expensive flight that we tracked locally is the Johannesburg George flight, that and followed by the Cape Town George flight. So you kind of see that semigration trend where people are living in coastal areas and commuting into the cities, and that's quite interesting.
I mean, obviously, it's all about surfboards again. So we're living more and more of our lives online. The amount of money we spend on online entertainment, and there's a lot about lots of different ways to look at it. Online gambling, online streaming, perhaps more. I'm sure there's a lot more money going there.
Yeah, that's one of the biggest growing areas, and we've seen that for the last few years. Certainly, subscription services, streaming, is one of the highest growth areas, and we've seen that increase by about three times over the last 3 years. And it's a function of a number of different factors. Firstly, the streaming services coming into South Africa, and so deeper penetration amongst the client base. As you know, you sign up for multiple streaming services. And this year, though, we've seen for the first time and a significant growth in AI subscriptions. So, we've tended to think of AI as a kind of a new technology for businesses and organizations to become more efficient and streamline our operations and deliver better service to clients. But actually, consumers are using AI more and more for their own purposes. And we see one of the fastest growing areas of spend amongst South Africans and amongst our clients are AI subscriptions.
Hilton Kilner, thanks very much indeed. Really do appreciate it. CEO at Discovery Bank. Fascinating to see where you're spending your money.
The Money Show with Stephen Grootes is brought to you by Absa CIB, honored by the 2025 Salter Awards.
Well, a new study out from the National Agricultural Marketing Council and the University of Pretoria examining the impact about what will happen if there is an increase in VAT and excise duties. And as you know, they were finally announced in the budget. The Minister, Enoch Godongwana, proposing a 0.5% increase in VAT. In my own view, it may happen, but I think there might be a long legal battle first. Bhekani Zondo is an agricultural economist for trade research, and he is at the National Agricultural Council. He joins us now, the National Agricultural Marketing Council, I should say. Bhekani, good evening. Really appreciate the time. Thank you. So obviously, an increase in VAT, in excise tax as well, would have an impact on inflation. How big would that impact be?
Good evening, Stephen, and to you and your listeners at home, and thank you very much for having me. As you quite rightly indicated earlier on, indeed, the increase in VAT as well as in excise duties does have inflationary effects on the overall economy. And even our study, as you indicated, it quite proved that in the first year of the increase in VAT, as well as in the second year, that is 2025 as well as 2026, indeed it would have that inflationary effect, of something in around 0.04% as well as 0.03% in year 2025 as well as year 2026. And this is translated by the overall general rise in the general level of prices in South Africa.
Would the impact on food prices be more or less than the impact on general inflation?
So in actual fact, the increase in VAT will actually be in the overall general inflation, but which will obviously be translated into higher retail prices, because when the CPI increases, it actually gets translated to high retail prices, which are then felt by consumers, obviously.
Yeah, would it have a particular impact on food prices? Would food prices be more affected than other things?
Obviously, the impact of VAT will affect all the other parts of the economy as they are interconnected, but it will be more felt in terms of consumer prices, and that is actually evident through the reduction, the expected reduction in terms of output sales in overall sectors. And our study proved that specifically if you look in terms of food manufacturing as well as the primary agricultural sectors, we saw that output sales will generally be negatively affected across all subsectors, be it your livestock, horticulture, as well as your field crops. And in terms of food manufacturing, that is the agro-processing side, what we saw was that output sales will actually also decline, be it in terms of meat processing, the grains, as well as the fruits and vegetables.
If things are more expensive, will people consume less? And if people consume less, will that result in government not getting as much revenue from VAT?
Absolutely, Stephen. And due to the reduction in terms of output sales, it's actually as a result of the reduction in terms of consumption expenditure, because due to the regressive nature of VAT, what we actually saw was that it actually reduces also the disposable income of consumers, and by that effect, it actually reduces their overall household consumption expenditure.
I mean, obviously there will be a big impact in all sorts of things, but things are completely intertwined with each other. Do you think government has done the modelling work on the VAT increase that you've done? I'm not convinced that they have.
I really can't comment on that, but I believe probably they may have done some analysis on the background, which actually motivated that they increased the VAT by these rates. But as you quite rightly indicated earlier on, from our analysis, what we found was that although the government was forecasting that they want to increase VAT by increasing VAT by 0.5% in the next 2 years, they are aiming to generate additional revenue of around 30 billion. However, from our analysis, we saw that the net tax collection will actually generate something in around 20 billion as opposed to the targeted 30 billion. And that actually shows that due to the interconnectedness of all other activities within the economy, due to the reduction in terms of disposable income and spending and all that, then the government loses some of this forecasted revenue that they want to generate along other parts of the economy.
Thanks very much indeed. Bhekani Zondo is an agricultural economist for trade research at the National Agricultural Marketing Council. I make the point, and I said at the beginning of that conversation, there might be a long legal battle around the VAT increase, and let me just explain my thinking on it very quickly if I can. So while the VAT Act says that if the finance minister raises VAT and says so in Parliament during a budget speech, then it is increased. It comes into effect. And you'll have seen many people making the point that VAT will go up because the minister said so. But there are also various court challenges underway. As you know, the DA and the EFF are in court against the way in which the fiscal framework was adopted. But I'm reminded too about what Kaya Sitole said to us on The Money Show about a month ago, where it would seem unfair somehow or unlikely that just because one person said something in Parliament, it then becomes so. What I'm trying to say is that it may turn out that the part of the VAT Act which says that VAT goes up just because the finance minister said it in Parliament on budget day may turn out to be unconstitutional. I'm not saying that it is. I'm saying that there might be a long legal battle over exactly that point. Because what else would the lawyers and politicians do? You're at The Money Show, 7 o'clock.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa CIB, honoured by the 2025 Salter Awards. Well, we'll talk in a moment to Siphumelele Zondo. He's been looking at the impact of tech stocks, of the tariff movements, of what's been happening in stock markets, particularly US stock markets over the last couple of days. It is just extraordinary, the kind of volatility that we're seeing. I mean, it's just like something out of a movie, frankly, and not a great movie, but let's hope this one has a happy ending. Nasdaq is down now 6%, the S&P 500 down 5%, and the Dow Jones is down 3.7%. I mean, it is just extraordinary after what we saw yesterday. And does tell you, I mean, if it continues like this, that we're looking at sort of long-term declines in value. Well, we'll talk to him in a little while. We'll also talk about the potential of SMEs in townships. And for so long, I've heard politicians talking about the township economy, and yet you just don't see much change. There's a lot to talk about there. And then investment school this evening, how you navigate what I suppose are market corrections and bear markets, how you invest in a time like this. That's one of the things that we'll be looking at in investment school this evening. Good to hear from you on 011 883 0702 and 021 446 0567.
The Money Show on 702.
Monday to Friday, 6 to 8 p.m.
Over the last kind of 5 years or so, and particularly in the last 3 years, there's been one sport which has really defined a kind of upmarket, suburban, South African middle-class identity. Now, I'm talking about the sport padel. You can call it something else if you like, but padel, you know the one. You see the courts in so many places. It's become almost a kind of big element. It's almost part of some people's identity. And I was fascinated to find out that this core aspect of upper middle class suburban identity was misspelt in a press release by a particular company today. They spelt it as paddle, Paddle. In other words, with a canoe rather than padel, the sport. And which company would get the spelling of this upmarket identity sport so wrong? Well, it was the upmarket identity company Discovery. I did smile, I have to tell you.
702.
702.
Stephen is on X.
At Stephen Grootes.
Well, a massive surge in tech stocks over the last 24 hours. Some of that coming off now because the Nasdaq is dropping so quickly. But people, it seemed, off the back of the Trump pause yesterday, were getting back into Bitcoin. Bitcoin was at $81,000 earlier, but Nvidia, Apple, Alphabet, Tesla were seeing big increases over the last 24 hours, and I think they might be losing some of that now. Siphumelele Zondo is our tech expert. He joins us now. Siphumelele, I mean, look, things have been so volatile, and tech shares have been paying such a big price.
Hello, Stephen. So definitely, it's been quite messy, right, in the last 24 hours, because if you looked at stocks, for example, yesterday, it seemed like the S&P 500 stocks, which are technology-led, really, because the big seven there, like the likes of Meta, Alphabet, and others, were doing really, really well. And that was also at the back of Trump saying he was going to pause those tariff hikes so that he had implemented. All of a sudden, again today, things take a massive turnaround. Same stocks take a quick dive, and the American. So it's a volatility that is quite unpredictable as well in the last, let's say, 24 to 48 hours because of what's happening in the United States of America.
What does this tell us about technology stocks right now? I mean, there must be value somewhere. There must be fair value. And I mean, yes, they might have been overvalued, Nvidia in particular, a couple of months ago. But what does this tell us about where tech stocks are right now?
I think it's just panic at the moment where investors are holding on to their money because they're trying to move it away and try to find where they can go and possibly even move away from American stocks because if, for example, look at the rally that we saw with the pound a couple of days ago. It seems like they're searching for alternatives outside the United States as there's panic in the United States. But at least there seem to have been some reprieve when Trump was pausing those tariffs. But there's also that issue with China, right? Because when you think about a lot of tech that we use, parts, Apple, for example, 75% of their parts are made in China. A lot of Mac products, about half of Mac products are made in China. They're trying to diversify now and trying to make some of them in different parts of Asia. But it's still largely Qualcomm, really, which is a Chinese-based company, So when China then says that they are retaliating against what the United States is doing, that means then that is going to also impact quite badly on the consumer in America and possibly on the investor in America as well, because that's where they're finding their technology or that's where they're importing their parts from largely.
I mean, these stocks have lost a huge amount this week, then regained it and now lost it again. Isn't the real issue that no one can trust what Trump is going to do? That's the problem. Yes, he hit pause yesterday. He can hit play again tomorrow.
Totally. And it's also apart from what Trump is going to do, it's what China is going to do, because China has been playing a game of retaliation this year, pretty much I would say for the first time, because when this tiff with China started about 5 years ago, they didn't seem to do much. But it's almost as if 5 years later, they're saying, hold on, enough is enough. We now need to do something because it's also impacting on us. So yes, it's how erratic the American president has been, and also with China starting to retaliate and possibly not knowing how far China is going to go in its retaliation. Because if you think about it, it's not just these tech companies in America that rely on Chinese products. When you think of fighter jets, for example, a lot of their parts are made in China. a lot of China holds a lot of their debt in America. So should China then decide that they're selling their American debt, what's going to then happen? Because they basically are the second largest holders of American debt after Japan. So it's all those issues that, to be honest, the American economy is also largely reliant on China, whether it's technology and other products that are used in the United States of America.
The other big thing that's happening at the moment is the development of artificial intelligence, right? We now have this huge trade war between the people who created ChatGPT and the people who created DeepSeek. I mean, surely this is going to have a big impact on all of that.
And that is actually what has started the trade war the first time around when Trump was president the first time around, because and then it was development of 5G and the fact that China seems to have been going so far ahead. It seemed like he had almost crippled certain companies in China then, but fast forward to now, they rely on each other because, for example, NVIDIA, an American company, it does produce a lot of these chips that are needed by Chinese companies that are developing a lot of 5G. But then again, while these companies, these American companies also need certain products from China. So the trade war between essentially the big two developers of a lot of artificial intelligence that we use right now, which is also a lot of artificial intelligence for the future, and what's developing is definitely going to hurt the development of AI and how the world is going to move forward, because really NVIDIA doesn't really have that much competition as well when it comes to those 5G chips. There are companies out of China that are trying to develop themselves into being competitors of NVIDIA, for example. But when NVIDIA hurts, then AI is going to hurt quite a lot.
There's so much going on, isn't there? Siphumelele, thank you very much indeed. Our tech expert, really do appreciate it. Once again, and I realize, we try from time to time not to be talking about Trump on the Money Show, but it does just tell you how the impact that he is having just literally stretches its tentacles to everywhere. It becomes almost unavoidable. And of course, more in investment school.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Small Business Focus is brought to you by Capitec. No matter the size of your business, Capitec's got you. So with all of the volatility on world markets and a big focus on international trade, the key way to manage our economy actually is to try and grow through this entire mess. And for many years, you've heard politicians talking about trying to grow the township economy. Loncedo Mtwentwe is a managing director at Vantage Advisory. Loncedo, good evening. Good to talk to you again. A major feature is how sort of disconnected the township economy is from the rest of the economy. And I think I can say that because millions of people move from the townships to a town centre literally every day.
Absolutely. Good evening, Stephen. Thank you for having me. Look, we're living an interesting time. I must say, the past 2 weeks have been nothing short of, that no one could have predicted to be where we are today. And again, I was reading an article, by the way. The journalist wrote that the only thing that is certain right now is just uncertainty. And in these periods, that what has to happen is that all the countries are looking inward. All the countries are really trying to make their industries to be more competitive and to really trade with each other. And within South Africa as well, it's time that as a country we look inward. And again, you have to unlock the sleeping giant, which is the SME township economy that is absolutely massive. That is estimated to be worth over 900 billion. And that is still an untapped potential that we have not yet, either as private sector or even government, for that matter, really supported to grow to the level where it is supposed to be at.
So, some things are obvious as to what's holding this back. Infrastructure, roads, maybe electricity, load reduction, all of those kind of things.
Yeah.
But there are things that government has been claiming it'll do, and there are things that other people can do.
Yeah. So the biggest stumbling block for many SMEs, in the township, remember, when you run a business, you have to be competitive, right? If you're not competitive, then no one is going to buy your products. That's why you'll find so many people will be buying either goods that are heavily imported, because at the price level, they're very much affordable. At the consumer, at the end of the day, all they want well competitive, affordable products. Now, if you're operating in a country where the cost of production or the inputs that you use to produce your goods, it becomes difficult then to compete or to be more competitive. And that is the road where government has gone heavily to say, look, we need to localize, localization policy, let's buy from the township. However, if you're not investing heavily in terms of the infrastructure within the township, then the cost of production is not going to be extremely high. Same thing, electricity costs will be high, rail or transport costs are extremely high. So those are the things that have really locked the township economy to boom to the level where it is supposed to be. But we've started to see that there are private sector entities as well that have started to say, look, let us look at this sector of this particular part of the economy and see what we can. And we started to see some of the companies coming in, and some of the retail shops as well. You've noticed they're coming in and as well trying to dig and really make money out of this. And it is starting to show from the private sector side of things that, look, there is a business there. However, the government has to play its role and really provide the support that it needs to provide to these businesses.
Is it about government providing support or just sort of getting out of the way? I mean, is there a lot of red tape for smaller firms still?
You know, what is interesting, by the way, Stephen, so we work with so many SMEs, that are from the townships. And you will realize that 60% of these SMEs, yes, are formal, 40% are informal. And of course, when you try to formalize them, the cost of, administration, when you try to formalize a business, it becomes too much for some of these SMEs. The cost of compliance, it becomes too much for these SMEs. And again, that's where now as government, you have to provide an environment that is competitive for these businesses to be able to thrive. However, if you don't create an environment that makes them to be able to thrive, then you're going to have a situation where government is always blamed. But we don't want to have a situation as a country where we always blaming government. However, there is a certain role that government has to create so that the markets can be able to compete in a free economy.
People will talk about capital, how difficult it is for businesses in townships to get capital. People may not go for loans. They will probably have access to stokvels. I would presume that's one way of doing things, and there must be some money there.
Absolutely. So the stokvel, sector is estimated to be over 50 billion, and again, it's not heavily formalized. And we know some of the biggest challenges in South Africa, not even in South Africa, basically, in Africa, but access to capital is not something that is easily out there. And that is why right now it is the time, Stephen, that governments, not only in South Africa, but Africa as a whole, you implement your African Continental Free Trade Area agreements that they've been talking about. It is the right time, speedy, implement. Let's make it happen, because at the end of the day, we're going to be left behind again. This is a crisis that we cannot afford to waste. So in terms of capital, yes, it's very extremely difficult. And one of those reasons, again, is because some of the SMEs or some of the township economy is heavily involved by informal businesses. Now, when you have to go and raise capital in terms of the funding markets, you find that some of the basics, are not easily there. Your numbers, your compliance documents, then it becomes difficult for any other funder to really support an SME where certain key documents, for instance, are not there. So, however, that's what I'm saying. This is the right time, again, where we have to ensure that we're not left behind when the world revolves in the next a few months ago. Yeah.
I mean, part of it, there's localization and then sort of proper localization. I mean, localization can be a shopping mall in a township employing people, but hyper-localization would be a shopping mall in a township selling things made in a township, right? Yeah. So you really want that. I mean, are there examples where that's happened quite successfully, where people have actually been able to do that kind of change in an economy?
Interesting enough, always. So localization as a policy in South Africa has been around for quite some time, by the way. From 2011, that's when it was really embedded in terms of our industrial policy. And I must say, look, we haven't seen a proper report from government that states that this is an impact that it has had in South Africa. But in other countries, I mean, if you go to South America, for instance, you will notice that, for instance, tequila is one of, big industries that just boomed globally. And in Mexico, you'll find some of the farmers have heavily benefited in terms of supplying the inputs in terms of that industry. And that's what you want. You want, as a country, to create a product that you can sell to the world that you're good at. For instance, I mean, look, we have an amazing weather in South Africa. So farming also, we have to invest on it heavily. Tourism, we have to invest on it heavily. Cannabis, go to the Pondoland. We've got amazing weather that we can grow cannabis and sell that to the world. And that's where legislation as well kicks in and try to say, look, remove the red tape, invest in terms of what you can sell to the world. And you will be amazed in terms of what it will come up with.
Lunqedo, thanks very much.
The Money Show.
Investment School.
The Investment School is brought to you by CFI, a leading global trading platform now available in South Africa. CFI Financial is an authorized financial services provider. Well, I've run out of words to describe the last few days. I've run out of words to describe what the Nasdaq is doing now, but gravity would be one way of looking at it. And so much has been happening. How do you survive, keep your portfolio intact? What do you do? And how do you even understand some of the terms that people are using that were last used around 95 years ago? Chantal Marx is the head of equity research at FNB Wealth and Investments. Asanda Notshe is the chief investment officer at Mazi Asset Managers. Good evening to you both, and thanks so much for coming in. Asanda, let me just start with you. There's some technical terms that people who are a little untechnical like myself could do with a bit of a steer on. There's a market correction. I hear it phrased all the time, and there's a bear market. What are those things?
Yeah, there are so many of these terms floating around. So let me start with one, actually, the market correction one. I'll first start by saying nobody really knows what that means in terms of the number, the amount by which the market moves. But effectively, it's referring to a sharp, sudden movement, substantial movement in sort of the level of the markets and where the share prices are trading.
And it's always down?
Not necessarily. It's down and up. So I think the sharpness and the suddenness of it is really what characterizes it being a correction. Now, the word correction would imply that something good is happening. It's more just a term that I think tries to amplify the sort of the depth of the change in direction.
So could a correction also be South African shares were undervalued for so long? After the formation of the coalition last year, there was a correction because the JSE went up.
Correct. So you could look at it, perhaps if you were to compare ourselves, maybe our valuation, so the level at which our market is valued, I think, compared to, let's say, emerging markets. So peers like Brazil, Turkey, and so on, and say, well, South Africa was probably cheap, i.e., its valuation was not as comparable, so lower than where those markets are. So upon the announcement of this GNU and some sort of optimism in our market, there was a correction upwards in a way that kind of maybe brings us closer to those peers from a comparability perspective.
Okay, that makes sense. Chantal, well then, what is a bear market? I mean, a bull market's the other way, right?
Yes, so let's start with a bull market. The bull market is what we have experienced over the last few years. I would say post-COVID-19, with AI as a primary thrust, markets have just been moving up. US markets, the South African market, and really that has been the story globally, probably with the exception of China. A bear market is the opposite. Markets move downwards. It can last as much as little as 5 months, or it can last 160 months if there's a big structural issue. But it's characterized by the market moving downwards persistently. You do get up days because that'll be quite normal, like yesterday, but you're in a bear market. And there we do have a specific figure. If the market drops more than 20% from its previous highs, you're in a bear market.
Okay, so I think that happened on the NASDAQ recently, didn't it?
Yes, the S&P got really, really close, down 19.5% before it corrected last night. But the NASDAQ is in a bear market. It officially entered a bear market.
And that is there any time frame for that, or is it just from the last recent high?
It's from the last recent high. It's as simple as that.
Okay, that makes sense. All right. So there are lots of different things that happen that create market downturns. And it's tempting to, and I know people compare this to the global financial crisis, the Asian financial crisis, to everything that happened before. But they're all different in some way. Does that mean you respond differently, Asanda? I mean, and I've been making the point, many people have been making the point that this is created by one person who's still going to be in this office for some time, which I think makes it different to what we've seen in the past when people tried to correct their mistake.
Yeah, there's this lovely phrase, it's about time in the market versus timing the market, which I think is quite relevant in this regard. So in this period, in the end, we'll wake up tomorrow. We'll still have all of our activities of daily living, take our kids to school. We need to get to work. We need to eat. We need to clothe ourselves. So in the end, I guess it's despite what's happening, one, I guess, needs to kind of maybe keep a mind on what the underlying fundamentals of what is in front of us are. Yes, it is difficult at this point to kind of think of things other than what you see in the news, but we've seen examples where, if you look back to, I guess, the COVID is a recent example, the GFC 2008, where we've had these really, really sort of disruptive things that have happened, where you could be tempted to react this way or that way on the face of what you see, but from those things, and maybe it's a function of where recent memory lies. But at the end of the day, we do. I think live through it and these things. I know it's very difficult to say that now and say, look, we need to look past it. But to try and react and time the market and say, well, this is a great opportunity. I need to sell because there's really some difficulties, and then try buy at the right time. What I can say is that it does present, to the extent that you've got some capital that's sitting, it does present good opportunities to buy really good assets. So all of a sudden, a good company, let's take Capitec, for instance. Now all of a sudden you're able to buy it at 10% cheaper than what it was. Same company. Nothing's changed as far as the fundamentals of the company. Now you could say, well, our growth outlook has perhaps changed or it's lower. Well, if Capitec is a great company, it will probably compete and take market share from other companies because it's got such a great business model.
So be cool now is a great time to buy. Isn't that what the man said yesterday?
Well, that's to try and overcome all of the madness, I suppose, and make us feel better. But there is some truth to it.
The triggers of this kind of thing, Chantal, I mean, in this case, has been pretty obvious. It's also interesting to me that it was signposted, right? He kept saying it would come, and I think the market now is in a point where it has to sort of take what he says he will do and what he does in a very complicated and difficult way to assess it. But normally, what causes these big events? I mean, in South Africa's case of the good correction, it was the creation of a national government, of a coalition. Sometimes there seems to be almost no real discernible reason, or something that's so technical most people don't understand it. And maybe we saw that with the great financial crisis. Some people saw it coming, but very few.
Yeah, so there's usually there are three different types of triggers. So the first one, and that's the one that we're dealing with at the moment, is events. So it's event driven. COVID-19 was also an event driven bear market. That's why we saw a pretty quick recovery, even though there were some issues that came along with that from an inflation perspective and interest rate perspective, and that dragged a little bit, particularly on the US market. Then you have a cyclical bear market. A cyclical bear market is when an economy runs really hard, the central bank starts raising interest rates because inflation is pushing up, and that dampens economic growth and activity, and that results in the near-term growth outlook deteriorating, and then markets come under pressure. And then the third one is a structural bear market, and that is what the great financial crisis was and the dot-com bubble was. The dot-com bubble is probably easier to explain. These valuations were just way too high. They were investors were pumping money into companies that were still making huge losses and had no cash flows, and eventually that bubble burst, and that was a structural bear market. So those are the three things that we're dealing with. The complication around this one is this event-driven decline, which should be short-lived, going to trigger a cyclical or a structural downturn, and that could lengthen the bear market that we are experiencing.
Okay, so it looks like it's short-term, but actually triggers something that's very fundamentally long-term, like a long trade war between the US and China.
Yeah, I mean, I think that the biggest kind of fallout from this could be a rise in inflation, and that rise in inflation can coincide with pretty poor economic activity because you have a confidence issue among consumers as well as businesses. Businesses aren't investing, consumers aren't spending money. The Fed getting forced to raise interest rates to battle inflation, and then you suppress economic activity even more. And then earnings come under pressure, and then share prices come under pressure. And that takes a little while longer. Is the wrong term, a lot longer to solve.
Asanda, stop nodding so vigorously. It's scaring me because it's giving us quite a scary outlook.
Yeah. It actually reminds me, there's I kind of get, people ask me to advise or help with their children if they're choosing like something to study at varsity. So, for a kid who's not quite sure, I always say, look at PPE, politics, philosophy and economics. This is prime time for that kind of thing because it's economic impacts, it's the sort of the philosophy and the psychology of how people think, and of course the politics of it all. I think these things really show us how interconnected not only the world is, but actually aspects of the economy and finance and so on are. Because it's not just what you do in isolation with tariffs that sits there and it doesn't impact everything else. But now we need to think about, the rand. There's an impact there. What happens with, as Chantal was saying, goods coming into countries, the inflationary impact. So then you think about interest rates. Then that's a growth impact. Then you start thinking about, the US, there's now a stagflation fear in terms of having inflation, which is externally an external, it's not inflation that's organic like what Chantal was describing, but in a condition where, you don't have the growth. So it's a deflationary environment with inflation, which is, it's a terrible situation to be in.
So okay, these things happen. How do you prepare for them to happen? And Chantal, I'm hearing Warren Ingram, who does our personal finance on a Tuesday, just saying, diversify, Stephen, diversify, because that's his thing. But how do you prepare in advance? If you think something's going to happen, if you sniff it out or you just think that there's going to be trouble, sometimes you have that sense. How do you sort of prepare for that?
So, at the risk of sounding like Warren Ingram, you do need to have a well-diversified portfolio. And then you need to be quite disciplined in taking profit when those opportunities arise. When you do have, for example, a stock portfolio or you're invested in a specific exchange-traded fund or a unit trust fund that tracks or that invests in a specific market, if these markets have run exceptionally hard, it is wise to revisit the investment case and make sure that you're not overly exposed to something that's really expensive. And if you are fearful that something's about to happen and a capitulation is going to take place, take some money off the table, put some money in cash holdings or gold if you want to.
Like everybody else.
But leave some powder dry, because if you think that something terrible is going to happen and that there's going to be a downturn, then it makes sense for you to have something available, because what these corrections and bear markets offer you is, as Asanda said, an opportunity to invest in wonderful assets at much better prices.
We'll focus more on that in a moment. You're with Investment School on The Money Show. Chantal Marx is Head of Equity Research at FNB Wealth and Investments. Asanda Notshe is Chief Investment Officer at Mazi Asset Management.
The Money Show.
Investment School.
Investment School tonight. Asanda Notshe is Chief Investment Officer at Mazi Asset Management. Chantal Marx, Head of Equity Research at FNB Wealth and Investments. Talking through some of the terms, trying to understand better how you invest in a current situation. Okay, Asanda, you talked about how sometimes there's good value. You know, a Capitec or someone like that. I noticed Capitec and ShopRite were two standouts earlier in the week. When the market dips like it is, or corrects, or is a bear market, depending on how this all ends, I mean, what do you do? Do you hold? Do you buy more? Do you sell? And I know there'll be someone somewhere who says you must do the opposite of what everyone else is doing, so you should be buying. Well, I don't know.
Yeah, I think, I guess if you look at, investing in the equity market as a start, we do typically look at it as a long-term investment. So, yes, some people maybe might say there's trading opportunities. I think for normal man on the street, it's not something that I would necessarily say is advisable, just because you're not watching the thing all the time, and you may miss those opportunities. And also, I think there's people who sit there with lots of tools, lots of support and information to be able to do that. So, in the absence of that, I think it goes back to then looking at fundamentally the opportunities that different investments offer in terms of what they do. So companies that have got really good competitive opportunities in their sectors, operate really well, managed by good people or good management teams, and offer a product or service that is competitive compared to their peers. So companies like that will survive. Let's just say, it's sort of the worst situation, and everything that we're talking about happens in terms of recessions and stagnation and so on. You'll probably find that those companies will survive. So in those instances, I think, as Chantal was saying just now, finding and investing more in those types of opportunities where you can now access them 10, 20% lower than where they were.
It's the Warren Buffett approach.
It's a great opportunity. And really just being steadfast in doing that and focusing more on that, as opposed to trying to maybe trade in and out and trying to time it. Is the next announcement going to be 150% tariffs on China? Who knows? But rather focus on what is more controllable and what we have in front of us.
Chantal, are there certain sectors that do better in these moments? I mean, good luck answering this question without saying the word gold.
Gold. So gold miners tend to do better from an asset class perspective. Gold directly also tends to do quite well when there's a lot of uncertainty around. And in bear market scenarios just generally. Other areas that do hold up relatively better is consumer staples. By that we mean the stuff that you actually just have to buy. You can't not buy food. So companies in the consumer staple space tends to hold up better. Surprisingly, or perhaps unsurprisingly, the brewers and the tobacco companies actually hold up quite well as well during periods like this. So those would probably be considered funding stocks during a time like this, especially when you identify an opportunity that you didn't see before. So hold on to them for a while, but don't be married to those stocks. At some point, they're going to underperform again because the market always recovers, and then some, and then these guys will tend to lag. But yeah, they're a pretty decent spot to be in during a time like this.
Asanda, do you agree? I mean, booze and tobacco?
Yeah, I think it's also got a lot to do with, I suppose, people's, I was going to say, to people's moods. And so they are boozing and drinking and smoking the whole time. But yeah, I think it's really about also companies that may not necessarily have faced the same headwinds as others. So, look, we're going to drink, people are going to smoke. It's not, but also the other, I think, important thing in our market is some of those companies that have got a rand hedge element to them. So companies that have got rand costs but dollar revenue also tend to do a bit better, just because when the rand does react in such situations, and let's just say the rand, I mean, now it's moved to the 19s, there will be that additional factor. So as Chantal was saying, Anheuser-Busch, international company, it's got some of those characteristics. On the gold side, maybe to hone in their Harmony, for instance, has got more local operations, so earns its revenue in dollars, but it's got costs in rand.
That makes complete sense. Naspers, of course, completely different, especially now. Chantal, I mean, there must be, I mean, if you look at what's happening in the States right now in particular, I mean, I've been really intrigued by how the JSE it hasn't swung as much. Is that because there's less to fear? I mean, because fear starts to drive investment decisions in many cases. And if you're in the US or China, there's quite a lot to fear.
Yeah, so I think that the JSE was cheap relative to the rest of the world to begin with. So the sell-off is going to be less because you've got less room to push down that valuation. The JSE was trading quite a bit below its long-term average valuation level, whereas the US, for example, was trading well above that long-term average level. So the starting point is slightly different. Then the second thing is, as Asanda also mentioned, the rand weakness actually helps the JSE because it supports the resources sector. All those companies earning their money in dollars and their cost base being in rand or other emerging market currencies. And we have these behemoth rand hedge stocks on the industrial side as well, like Richmond, like British American Tobacco, like Anheuser-Busch. And they do tend to prop up our market when the rand is quite weak. So I think that kind of explains it. Yeah.
Asanda, you've got to stay quite disciplined during this time, right? You've got to try and be as rational as you can rather than kind of emotional, even if some of the people making the decisions are less than fully rational.
Yeah, so staying calm, I think, is the name of the game. Much easier said than done. I think it then goes back to having a clear understanding of your strategy. What are you trying to achieve? So if you've got a particular objective, so you are saving for a particular thing, kids' education, retirement, and so on, I'm going to say, to characterize it, this period is almost like a T20 match. The outcome of what happens here is not going to determine the rest of your life, to be honest. And so you can, unfortunately, make decisions that are quite detrimental to your goal if you overreact. There's statistics that are thrown around. You know, if you missed a certain number of days in markets over the last 100 years, in so up days, the difference in the return that you would have achieved versus having just been in the market and sort of stayed the course. So I think that'd probably be the key message that we'd probably want to share.
Asanda, thank you very much indeed. Asanda Notshe is the Chief Investment Officer at Mazi Asset Management. Chantal Marx, thanks so much for coming in. Head of Equity Research at FNB Wealth and Investments on Investment School tonight.